Gold prices have crossed $2,500 an ounce for the first time in history, rising by $700 an ounce, 40% over the last 10 months. They've never before risen so far, so fast. So 2 questions. Why? And will this rally continue? Prices are determined by 2 forces, supply and demand. We'll take demand first. Extraordinarily strong demand for gold has been coming from 4 sources. One is war and worries of war. The current rally began with the Hamas attack on Israel last October. That conflict has now spread to Yemen, Lebanon, the Red Sea, Iraq, and Iran, and the U.S. and our allies have been drawn into that tinderbox. Conflict is also spreading and intensifying in Europe. Russia's war on Ukraine is in its 3rd year, and for the first time since World War II, foreign troops occupy Russian soil. Russia's European neighbors are all preparing for conflict, from Finland and the Baltic states to Poland, and NATO is moving forces eastward to be better positioned. Then there's China, which is becoming more aggressive toward Taiwan and the Philippines. As a result, Japan, South Korea, Australia, and Vietnam are aligning closer to the U.S. And there's the ever-present nuclear saber-rattling from North Korea. I do not expect peace to break out in any of these theaters, so geopolitical worries will build and gold prices will rise. The second force driving the rally has been speculation about what the Fed would do on interest rates and when. As expectations for rate cuts have ebbed and flowed, gold prices have risen and flattened out. Now the signals are lining up that cuts are coming in September, with more later this year and next. Falling interest rates boost gold prices by eroding the appeal of treasury bills as competition to gold, and by lowering the value of the dollar. A weaker dollar makes gold cheaper for the vast majority of global gold buyers who trade in currencies other than the dollar. I expect these monetary forces to support rising prices for at least another year or 2. Third, gold buying by central banks. One bank in particular, the People's Bank of China. Over the past 2 years, the PBC has been buying gold with a vengeance. It's doing so for 2 reasons. One, its portfolio is unbalanced and it needs to diversify. Gold has been the way they've done that. 2, China sees how the West has used the dollar to punish Russia, Iran, and North Korea, and they've decided to insulate themselves from that leverage. Again, gold has been the means of doing that. I expect this trend, too, to intensify as tensions with the West rise. The People's Bank of China has enormous reserves with which to buy gold. Only 4.5% of their assets are in gold. The nation with the economy most similar to China's is India, and it has 9% of its assets in gold. China has reason to hold more gold than India, but simply matching India's allocation would have a huge impact on global gold prices. Fourth, jewelry and investment demand from Chinese buyers has skyrocketed as they've sought protection from crashing real estate and stock market values in China. Gold has been one of the few safe haven assets available to them. The Chinese economy is in deep trouble, and I don't expect a recovery anytime soon. So those are the demand forces working in the gold market today, all of which point to rising prices for the foreseeable future. What about the supply side? Well, it comes down to mine production and whether it will rise to meet demand. And my answer is no. How can I be so sure? Because over the past decade, mine production has barely budged, while gold prices doubled. Why haven't miners ramped up to take advantage of higher prices? It used to be that gold was largely mined in countries that were politically stable and friendly to the U.S. No longer. It used to be that gold was found in more convenient locations. No longer. It used to be that countries gave miners free rein to mine as they wished without environmental and labor constraints. No longer. So gold is harder to find and more expensive to mine. Miners have to cover those costs, so they raise prices. When prices rise for new gold, the value of the gold you own, or could have owned if you had bought, say, 6 months ago, it rises too. Gold is not going to get less expensive to mine. It will become more expensive. So it's not too late to get in on this rally. Add gold to your portfolio or increase your allocation today. Thank you.